All right, good morning, guys. We have a really fabulous guest on a subject most people don't know about it within my network. Well, we're going to have Scott Carson teach us about notes today. Scott, why don't you give everybody an introduction to yourself first?
Yeah, good morning, good afternoon, good evening, everybody, depending on when you're listening to this. Just honored to be here, Andrew. Scott Carson, I'm out of Austin, Texas. I'm known across the country as the note guy for the last 15 years since the last recession we ran into. I've been focused on the niche of buying distressed debt, distressed mortgages, first liens on residential commercial properties. Been doing that all across the country, including in Hawaii as well too. But I buy debt on a one-off to a big bulk basis. I'm buying directly from the banks, and our biggest goal when we buy this debt is to really keep the borrowers in the property. And so for the last 15 years, we've bought over $1 billion in distressed debt, and absolutely love being the bank and working to keep people in their houses. As I make the running joke, we're making America great again, one distressed borrower at a time.
Scott, why don't you just explain for our audience just simply what is note investing? Just in case some people have misconceptions, they understand better what it is.
That's a great question. I'm glad you brought that up. Yeah, because most people, as you and I were talking before we got started here, most people, when they think of note investing, they think of it's somebody selling a house on terms. I'm going to owner finance a house and I'm going to sell it on terms and I'm going to collect payments. And that's one aspect of note investing, but it's a small aspect of note investing. There's a lot that different aspects of buying a note. And when you're talking about buying debt, we're actually talking about buying a mortgage. We're talking about buying the debt that's secured by property, by real estate, either residential, commercial properties, and you may be buying the first mortgage, the senior mortgage, or in some cases, there's a smaller percentage of people that buy junior liens, the second or third mortgage on a property. I don't necessarily recommend that. I like being in the first lien position because then you really hold all the keys to the doors. But when we talk about buying notes, we're buying that debt, and we don't own the property when we buy the debt. You're literally, when you're buying a mortgage, especially a distressed mortgage, you're buying that debt at a discount, but the borrower still owes what they owe. If they owe 150 grand and you bought that mortgage at 75 grand, well, just became the bank and you acquired that receivable that I owe you that mortgage at 50 cents on the dollar. The borrower still owes 150. And so the way that we make money as a note investor, and make great returns, and that's where the profitability side is in that negotiation with the borrower at that point. When we buy that mortgage, we then become the bank. We have the same rights to foreclose. We can modify it, work with the borrower however we want to. Actually, have a lot more flexibility because now we're stepping in at a discount. But then our biggest goal is to reach out to the borrower and actually to keep them in their house. Most people think the banks want to take this real estate back. Banks, lenders don't want to own real estate because it's not as profitable as being in the mortgage space. And so that's what we do. We work to get the borrowers back on track through modifications, trial payment plans. If they can't pay, they can't stay, but we can work out a way for them to walk away from the property, or give them cash for keys to help them move out if we need to. And of course, if they don't want to play ball with us, then we like I said, we have the same right as the bank. We'll kick the file to our attorneys in every state, and then they'll start the foreclosure and legal process of taking the property back. But some people think you've got to have millions and millions of dollars to be a note investor. And that used to be the case back 20, 30 years ago during the RTC days and same loan scandal, stuff like that. But no, I mean, we buy a lot of single notes. We're able to cherry pick from banks and lending institutions and hedge funds. And a lot of our students are getting started. And if they got 35, 50 grand, they're able to pick up one or two notes. You can use your IRA. Using your self-directed IRA is a great resource for funding deals or using other people's money to buy notes. So it's a beautiful thing. You got a lot of options. I mean, each state's a little bit different when you're buying a note because you need to know what the foreclosure time frames and what's going on in the state. But it can be a very, very positive and also very profitable nature for three reasons that I like about note investing a little bit different. Is we virtually have no marketing overhead when it comes to finding deals. A lot of investors are used to sending out letters or postcards or bandit signs or door knocking. I've done that all in my investing career, been shot at a few times. I don't want to do that again. You know what I mean?
Like a shot.
We get our deals direct from banks, direct from lenders. So a lender may have a list of notes that's non-performing they want to sell, and so we get that list from them every month or once a quarter. So it's
Oh,
an
wow.
email blast, which is maybe anywhere from one note to 1,000 notes, which is really great, and we can cherry pick from there. So that's the great thing is we see a lot of deal flow, especially right now with people struggling and default starting to increase a little bit. We're starting to see a lot more distressed debt on the residential and the commercial side both. Two is we get bigger discounts. Most people are trying to get a property and the discounts that they were used to aren't there anymore. But we're not usually buying anything above 50, 60 cents on the dollar of value for the most part. Sometimes even lesser than that. Sometimes pennies on the dollar, depending on how distressed the asset is. So we get bigger discounts, and then our profit margins are pretty good because we don't have to worry about a lot of times. If we're buying an occupied asset, Andrew, we like that. We actually want to keep people in the house. So we oftentimes can get that non-performing mortgage back on track and the borrowers start making payments. So now that asset is starting to cash flow and, without having to deal with, evictions or toilets, tents and trash outs. We got somebody that wants to stay in the property. They want to take care of it and they just needed a helping hand out of a bad situation. And then our goal is to get it back on track for at least 12 months. And then once a mortgage is paying on time again for 12 months, it's reclassified from non-performing to reperforming. And now if we bought that note originally at 50 cents on the dollar, we could probably turn around and sell it back to Wall Street, back to other investors at somewhere between 85, 90 cents on the dollar. So it makes for a really good profit margin without having to do all the worry about rehabbing and evictions and then trying to resell it on the open market. So hopefully that wasn't too long-winded of an answer
No,
for
no,
your
that's
question.
wonderful. That's wonderful because I was just at an REI meetup the other day, and when I asked just a few people out of curiosity, most of them either had no idea what note investing was or solely thought it was like D-class properties, only single family, in immediate distress. And it's like, no, guys, it's a little wider. It's a little wider than that.
Yeah, you're
Oh, yeah.
100% right. Most people think it is, it's just completely trashed out assets. And don't get me wrong, we see that share of ugly stuff that's been sitting around, but we also see really great, beautiful assets that somebody hasn't paid in a while, and every state's a little bit different foreclosure wise. So like I'm working on a deal in Florida right now that's taken a year and a half to take the property back and get the tenant, the borrowers out of it through eviction because Florida's a year-long foreclosure process. But here in Texas, I got another one in Texas. We were able to foreclose in 30 days because the borrower had moved on and didn't want anything to do with the property anymore. So it varies. It's not just an old a crotchety old man who doesn't want to do any rentals or rehabs anymore.
Yeah, that's actually been suggested to me because I'm getting older and crotchety. I think the crotchety faster than the older, but for both. And I looked at the guy and was like, geez, I don't know anything about note investing. And then oddly enough, we stumble upon each other. I'm like, this is great. We'll get Scott on and kind of educate up our audience. Most of my audience is targeted towards LP investors, people that are used to investing in multifamily, storage, the various different things, in syndications where they want to be somewhat active. They like researching. They want to ask a lot of questions. They know what they're doing, but they don't want to be running a single family portfolio, for instance. If someone like that is interested in investing, is this a meaningful thing where they can go and call a guy like you and learn more and say, hey, Scott, I really just want to cut a check and be in a fund, and what kind of returns could I look at? These are people that are spoiled. They're used to getting their depreciation on multifamily assets. And then in the last 3 years, they've been really spoiled because they've been getting, these great IRRs that are obviously disappearing, very fast. If you could talk on that, that would be a great thing for me.
Yeah, I'm glad you brought that up because we do get a lot of people that have been part of syndications or are trying to buy an apartment complex into the note space because they're able to pick up multiple doors at a reduced price. Now, you don't necessarily have to be, non-performing does take some workouts. It takes working with a servicing company and attorney to help with the borrower outreach and stuff like that. You're not, I'm not going out and knocking on doors and trying to collect. I'm not doing that kind of stuff. It's all professional based and if you got a non-performing note, you're paying a servicer somewhere between like, 75 to 95 bucks a month to work in that bar outreach. And then if you have to kick it to an attorney to foreclose, that's going to cost you from $1,000 to several $1,000 depending on the state. So a lot of people that like that passivity and not without having to create another job for them. I highly recommend performing notes. You can buy performing notes at a decent yield, 6 to 8%. It's usually newly originated, especially with the interest rates increasing. It's a great time to be buying that stuff. If you like a little higher return, you can buy re-performing notes from investors like me and others who have bought non-performing stuff and got it re-performing. It's with a third-party servicer, the borrower's on automatic payments, and you may be able to pick something up at high single digits to mid-teens as a decent ROI without having to do any work, just kind of buying that cash flow. And still buying it at a discount, so if something does go wrong, you still have enough room to foreclose and take the property back and sell it off. But yeah, if you're interested in doing something a little bit bigger, we work with a lot of investors out there who want to, hey, they like learning the nuts and bolts, but they don't necessarily want to make the sausage. You know what I mean? And so yeah, we deal with investors all across the country, professionals like, okay, I want to put a little money in here. I want to get a decent return. And we've got some different options for folks. If folks are looking to put a little bit of money with us, we'll give them somewhere around a 6 to 8% steady return, without having to do any work. If they want to put a little bit, you want to get a little higher return, if somebody wants to put a little bit of a higher amount, like 250 or more with us, then we'll structure an individual deal or portfolio we can buy with them and then go splitsies on the deal. And then you have a pretty good double-digit return on that and have it structured a little bit differently through our attorneys and our funds. But yeah, I encourage, the most important thing is no matter what you're going to invest in, you got to learn that asset class because it's different. We don't get depreciation as a note investor. That's one big thing that we don't get. Now, the beautiful thing is we're buying things a whole lot cheaper. Okay. So if and your returns are often a lot higher. So if you got to pay some taxes, you pay some taxes. But the great thing that is not tracked, there's no MLS, there's no reporting of what I pay for a note. Okay. So if I buy $150,000 note and I pay $75,000 for it, and the borrower I foreclose and sell the house for 100 at the auction, that's still 50 grand that I didn't collect on, right? That I can 1099 and write off my profits. I can 1099 it to the borrower. All right. So even we modify or reduce things, we get a lot of write-offs that way by reducing
I
our
didn't know that.
profitability. Yeah. So you just need a different, you need a bookkeeper, CPA that understands that, right? It's like we're getting ready to send out a lot of 1099s, or was it 1099Ks or whatever they are, or I's. I don't know. I'm not an accountant or a bookkeeper. I let those people handle that for myself. But it's a very, very strong bargaining chip we use when we're dealing with distressed borrowers. Like, listen, you've got a portfolio of property here, and you're using the cash. You're not paying. You're using this one property as an ATM. You're not paying the bank. I'm the bank. You got to pay me. If I foreclose on this thing and you're not going to work with me, I'm going to slap a judgment against all your properties for the amount that is owed. So it makes better sense for you to either get back on track or just deed the property over to me and go your merry way. We're letting you walk from the debt. You know what I mean? We're not going to do like a lot of banks have done before and charge you a 0% interest loan or come back with you an unsecured. No. Just give me if you're going to work with us, we'll be your best friend. We'll be your knight in shining armor. But if you're not going to play ball with us and continue to tell us to go pound sand or hide your head, you're not going to like me because we have the same rights as the bank, and the bank always wins. You know what I mean?
Yeah. What percentage of your investors are self-directed IRA or self-directed 401k people?
That's a really good question. Off the top of my head, because we've got a mixture. A lot of folks love the fact that they use their self-directed IRA because it's tax-free or tax-deferred growth, obviously, and you can put a note in an IRA. I would probably say somewhere around, oh man, it's hard to say, probably around 75% of our investors have used their IRAs at some point with us. Now, they may have other funds, they may have other savings, retirement accounts, stuff like that. But yeah, most of them are using, to buy a note, it's, or a piece of property, you've got to move your retirement into a self-directed custodian like Quest or Equity Trust or Madison Trust. But, we had a lot of people that, They're using their IRA. You know, they start off with 50 grand to buy a note or fund a couple deals, and then they're off and rocking, and then they're raising their own capital from investors out there and
Oh,
making a infinite return because they're not using their own money.
that's wonderful. How many students do you have, Scott?
I've been teaching note investing since 2010. So I've been teaching this niche for 13 years. I've got thousands of students that we've
Oh,
helped
wow.
out there. You know, I'm very, very proud of the fact that we've got a lot of our students are out there and they teach other people, or they also are. If you were to do a who's who in the non-performing note space, they probably fall from the Scott Carson tree for a big part of them, which we're pretty excited. I'm a big believer that if you give people the tools and actually show them how to do it, those that want to do it will go do it. And that's kind of my approach. Is I'm not one of these guys that likes to blow smoke, or hey, you sign up for this little thing and you can learn this, but you got to pay me this huge exorbitant, $50,000, and then I'm still going to control things. I'm the guy that shows you exactly how to go find the deals, what to say to the banks, what not to say, how to evaluate these things, how to raise capital. I mean, it's pretty simple business, but a lot of people like to make it complicated. And you're just some people tell you that banks won't sell you notes, and yeah, you're not going to call Bank of America, Chase, Citi, Wells Fargo. They're not going to deal with you individually. There are still thousands of lending institutions. There are also websites that you as an investor could go at and look at notes right now and make offers on. And you got to realize when a recession is going in, lenders are keeping an eye out. Lenders need to move stuff because
Yeah.
they have to get that non-performing stuff off their books, because if they have too much of it, the Justice Department will step in and stop them from lending, and they don't want that. That's how banks make money, is lending. I mean, you've seen hundreds of thousands of people get laid off, mortgage companies shutting their doors, stuff like that, but they still got to keep that lending process going. So the more distressed stuff they have, the more they're looking to move it off. I mean, you know, we got a lot of phone calls back in 2008, 9, and 10 when we got the word out and what we were doing buying. And then the phone stopped ringing. It was all me and my team making outbound phone calls or drip marketing. Well, the last 6 months has been interesting to see emails and phone calls coming in from banks and lenders asking us what we're buying, or can we make an offering and make a bid and go from there. So it tells you it's a lot of opportunity. And I'm not trying to sound like I'm excited about what the next 3 years. I'm just damn jacked up there, Andrew, because it's
Yeah.
going to be a good time to be in a note investor the next 3 to 5 years.
Yeah. I hate making predictions, but I've been making the predictions that, the zenith for multifamily kind of came and went. And in my opinion, the risk adjusted reward was going to be better in debt in the next, coming years. So, this is a space that I'm very excited and interested about. Scott, how do people get a hold of you? And then I wanted to make sure you get your plug in for your 1-day educational thing, because, a lot of my viewers I would really recommend them, going to that after talking to you before the show.
Yeah, I mean, the easy way to get a hold of me is you can go to the website weclosenotes.com, weclosenotes.com, and you'll see our different class schedule on there. And then we also have the podcast, the Note Closer Show podcast, that's been around for about 6 years, over 730 episodes. And it's a wealth of knowledge there with guests and vendors and me teaching stuff. But yeah, I'm glad you brought that up. One of the things, Andrew's doing such an amazing job with this podcast. And I got to say 2 things. First of all, if you're listening to this, make sure you hit the subscribe button and make sure you leave Andrew a 5-star review. We as podcasters love to hear that. And he's kicking ass and doing a great job with his podcast. So make sure you do that. That's the first thing. Now, second thing, if you do want to learn more about notes, you can go to this website, noteweekend.com. I teach a 1-day class every 3rd Saturday of the month, and it's usually $99. And it's my students call it the Cliff Notes version of note investing. I show you how to find, fund, and flip in roughly about 5 hours. Not a pitch fest. It's literally just kind of a dip your toe in the water a little bit more. But if you go to noteweekend.com and type in the code Andrew, I'll give you the class for free. And if you can't make it live, don't worry. We'll send you the replays, and you can start dive into the deep into note investing and see if it's something for you. But that's noteweekend.com, special code Andrew, make it all caps, and it'll give you the class for free.
That is outstanding, Scott. Really, thank you so much. We'll probably have to catch up with you, because I definitely want to attend that class and get caught up with you again. Thanks again.
Can I add one thing there real fast there for you? You mentioned about a lot of apartment investors. We were talking about this prior hand, and you said the zenith for apartment investment you think is past. And I think you're accurate. I think we all know that multifamily has been the most expensive asset class out there, and people overpaying. There's this wave of people that bought multifamily property over the last 3, 5, 6, 7 years with the idea that they were going to refinance out. Well, we know that exit strategy has gone the way to the dodo bird because interest rates have gone through the roof compared to what they thought. So there's a lot of performing or mature loans that are starting to hit that non-performing market. So this is one thing we can actually track, is the distressed commercial side of things. And while an apartment might be overpriced, one of the things that we get is when we see these lists, we actually approach the bank on a distressed apartment, say, hey, can we buy that note from you at 70 cents on the dollar or 65 cents a dollar? Imagine cutting in another 35 to 40% profit margin when you buy the debt and then either modify the loan or take the property over because the borrowers can't get refinanced out. Now you just built yourself another 25, 30% profit margin on an asset class without having to foreclose. And your numbers will start to look really good at that point. Your cap rate will go through the roof. So something, a little bug there. If you want to know note investing, that's one great facet to learn about how you can take over these commercial assets.
That's wonderful, Scott. I think this is really going to be a helpful episode for a lot of my LP investor audience. Thanks again.
Thank you, bud. Have a great day. And once again, thanks for having me.
Thank you, Scott.